So let me welcome on board the management of KRM Energy, or IRM Energy actually, joining in on the show right now. We have Karan Kaushal, the CEO, and Harshal Anjaria, the CFO at IRM Energy, both on the show right now. Gentlemen, hi, good morning. Good to have you on the show and congratulations on the listing. If Karan, I could start off with you. IRM Energy is a city gas distribution company. You've got about 4 geographical areas under your belt right now. How many of these are operational, and how do you see the contribution from each of these areas rising going forward?
Yeah, out of these 4 geographical areas, we are operating in all these 4, and 3 of them are on the growth stage, and the 4th one is just starting. So in the last year, we did an average volume of 540,000 standard cubic meter per day, out of which around 50% came from Banaskantha and around 45% came from Fatehgarh Sahib, and rest came from Diu and Gir Somnath. The 4th GA, which is in Namakkal and Trichy in Tamil Nadu, have just started contributing to the volume. So going forward by FY27, the new GA will be contributing 30% of the volume, and we will be reaching a volume of around 1.5 MMSCM, which is 15 lakhs SCM per day.
Right. Harshal, if I could get you into the discussion. The previous fiscal, we've seen a sharp drop in your profitability. What led to that, and were you not able to pass on higher raw material cost to clients?
Yes, in FY23, the profitability was affected due to the high input gas cost resultant due to Ukraine-Russia war. We strategically did not pass on the entire cost to the customers, because in Fatehgarh Sahib, where we have a high industrial belt, we are in the process of transition, and we are connecting industries there. And it was a conscious management decision not to increase the prices, because our strategy was to hold on the volumes and build the volumes.
Sure. Karan, going forward, what will be your stance? Will you look to chase volumes over margins?
Yeah, we want to build on our volumes, because on a scale of volumes vis-a-vis other companies, we are still a small company, and we want to grow this volume 3 times in the next 4 years. But if there is a trade-off, then we will definitely chase volume. But we are very, very confident that we will be able to maintain the bottom lines also.
Sure. Harshal, by repaying your debt of about 135 crore rupees, by how much will your profits increase, and what's the cost of debt for you?
Yeah, so we are going to prepay 135 crores of the debt, and the average cost of debt is around 8.8%. And we are looking at a saving of around 12 crores to 13 crores on an annual basis. So on an EPS level, currently at 4 crores shares post listing, that should translate at around 3 rupees per share savings.
Right. Karan, the 12th round of city gas auctions, that's begun. Is IRM actively bidding for any of these areas, or will you first look to develop the existing ones?
We are just looking at the list. These are areas which are on the tougher terrain side in the northeast and the state of Kashmir. But we are just evaluating the demand potential, and if it aligns to our future growth plans, then we'll definitely bid for it. And meanwhile, we'll be concentrating to develop our existing 4 areas.
Right. So Harshal, over the long term, what is the kind of volume growth and margins that one can expect from you?
Yeah, so as we mentioned earlier, we are looking at volume of around 1.5 MMSCMD as we close FY27. Margins, I will not be able to mention, because it will be a forward-looking statement, but historically we have delivered double-digit EBITDA. In Q1 also we have delivered an EBITDA of around 9 rupees per SCM, and we are reasonably confident that we will be able to maintain at this level, if not better.
Right. Karan, Harshal, both of you, thank you so much for taking the time out, and good luck post-listing any which way. We'll, on that note, wind it up right here on this edition of First Trades in the Market. We leave the markets now at the lowest point in the session. We're down a good 240 points, no less, on the Nifty futures, and we are sub that 18,900 print as well.